We've seen this pattern before, and it is not looking good. It's not looking good. You try to warn your friends, you try to warn your family, but they won't listen to you, and they're completely unaware of what's happening. You guys let me know if you're feeling like something's just a little bit off. You've likely felt like something's been off for a while now. Jobs will be lost. Matter of fact, lots of jobs will be lost, and unemployment will skyrocket. I don't know if you're aware, but the Japanese yen is collapsing. The British pound currency is collapsing. And these economic cycles, they're disproportionately damaging to the poor, to the low income, and to the middle class, comparatively to the top 1%. Mainly because the middle class and the low income, they don't understand what the top 1% knows. The 1% knows what is happening and they are preparing for it. And many of the oligarchs of the world, or the top 1%, it's kind of evil. They're definitely greedy, and they don't care about the pain that the 99% will experience. So do not let your family be caught off guard. I'm going to be sharing with you what I'm going to be doing to prepare my family. So make sure you subscribe to the channel so that you and your family can prepare as well. Now, the Federal Reserve here in the United States, they have been raising interest rates. This is the Fed's plan of action for fighting inflation. And in the short term, we've seen the balances on 401ks, IRAs, and investment portfolios wiped out. Some 20 to 50% of losses have already been reported depending upon the types of assets that were held. And this is what the Fed calls quantitative tightening. So one of the biggest problems that harms the 99% is that when the Fed raises or lowers interest rates, this affects asset prices. And this also affects jobs, job availability, hiring, firing, layoffs, and ultimately unemployment. And when inflation is high and assets like the housing market and the stock market, when they're rising, the poor and the middle class struggle because they can't afford to continue to purchase the assets at the higher prices. So we've seen inflation on other things that we purchase, food, gas, and whatnot. But inflation of assets is even more important. It's more detrimental if you don't own these things. And in the meantime, the top 1%, they're getting wealthier and wealthier. And this is one of the patterns, okay? So I want you guys to pay very, very close attention. Now, in order to break the cycle, the middle class, the low income, and the poor, they need to prepare and position themselves and their families to acquire more assets. Now, in the past week, there have been two countries, Japan and Britain. They completely lost control of their currencies and their equivalent of the Federal Reserve. The Federal Reserve for them had to step in. And we saw the exact same thing happen right here in the United States back in 2008. And that wasn't just a United States recession. That was a global Great Recession. And we're seeing a very similar pattern line up here. And we saw many of the too big to fail companies collapse. Millions upon millions of people were laid off. And we experienced nearly a depression at that time. And the stock market, if you guys remember, it was actually up very strong on Wednesday. And many investors, many people got caught off guard. Like, hey, is this the worst? I mean, like, is the worst behind us? Are we out of the woods? Not by a long shot, guys. So in the United Kingdom, the bond market was crashing. And the United Kingdom the United Kingdom financial markets, they were basically seizing up, right? So the United Kingdom's bond market was crashing. The UK financial markets, they were seizing up. And basically the Bank of England, which is basically kind of like the Fed for us, they pivoted from doing quantitative tightening. And ultimately, interest rates got too high, and ultimately they risked continuing down the path of raising interest rates and driving their economy into a depression, or ultimately potentially a currency collapse. The Central Bank of England got scared and they pivoted and they began printing money and assets rallied up. But this is a very short-term fix. So don't fall for this trap. 10-year treasury, 10-year treasury yield right now is sitting at right around 4%. You've got mortgage rates, right? Mortgage rates are around 7% for a 30-year fixed rate mortgage. And this is if you have great credit. Now, what the Fed is doing right now with interest rates, they only have really two tools. They have a few others, but their biggest two tools that they're using, they can control interest rates. They can raise interest rates. The Fed can lower interest rates, and the Fed can print money, or they can clear out their balance sheet and sell assets. And so right now, the Fed is not printing money. They've turned the money printer off and they're raising interest rates. And this is driving up economic strength for the US dollar, but is causing weakness in the global economy for other currencies. It is making other currencies collapse. But guess what? The United States is not immune to what is happening in other countries. So other countries' economies, other countries' currencies will likely collapse. And then the United States may be a part of this. And this is why it's very important that we prepare now so that we can position ourselves and our families so that we're in the best situation possible. Now, none of this is financial advice. I'm just sharing with you guys what I'm looking at, what I'm observing, what I'm seeing, and what I'm doing. You should make your own plans. You should make your own decisions. I just wanted to put that out there. So what the Fed is doing right now with the rising of interest rates is this is ultimately causing a bear market in the stock market. It's forcing real estate to slow down. People can't qualify for mortgages or don't want to pay tremendously higher monthly mortgage payments for the real estate assets that are available and are for sale. So the Fed's interest rates are right now causing a bear market in the stock market. It's caused a stock market crash. Real estate is slowing down drastically. We're seeing negative GDP and a cryptocurrency collapse. Now the Fed, they're going to end up raising rates probably a few more times. I can't say exactly how many more times because even the Fed doesn't know. But the Fed is basically going to back themselves into a corner to a point where they're forced to lower interest rates. So the UK, they pretty much gave up. And when I say they gave up, the UK gave up and stopped raising interest rates. They started printing money. And so basically, this is the exact opposite of what we're doing here in the United States. The US Fed will likely be forced to do the same thing very, very soon. So the Fed is saying, oh, we're going to keep raising interest rates going into 2023. We're going to raise interest rates into 2024. We're going to get this inflation under 2%. I don't think that that's going to happen. I think that the Fed's hand will be forced to pivot before the 2% interest rate target inflation rate is reached. And it's going to happen more than likely next year. Going into 2023, we'll see. I can't predict the future, but based on what we're seeing and the rate that other currencies are collapsing in other countries, it's likely to happen here. And the Fed will likely be forced to change directions and alter their plans sooner than expected. So the Fed, they basically control the stock market going up, the real estate market. With the Fed's control, they can control the interest rates and they control the printing of money. And with this power, what a lot of the 1% understand is that when the Fed is lowering interest rates and they're printing money, this excess currency, this printing of money is creating and causing inflation, and it ends up going into assets and it dries up asset prices. And this is the start of this is wealth building for the 1%, but this is to the detriment of the 99% in many cases. But I have some very, very good news for you guys. So the Fed will likely be forced to pivot. When this pivot happens, I hope my family, my community is prepared and is paying attention to what's happening. We will experience the same fate as these other countries, okay? So the Fed will ultimately inflict as much financial pain on our economy that our economy can handle. But then, before a total economic collapse, the Fed will be forced to pivot and to reverse course. So what this means is that the Fed will initiate quantitative easing. So quantitative easing is the exact opposite of the quantitative tightening that they've been doing for like the last 8 months or so. Now, once the Fed is forced to pivot, we could potentially see one of the greatest wealth transfers in our lifetime. But families need to prepare now. You need to prepare to spread the word so that the poor and the low income and the middle class have time to prepare, and that they have time to position themselves and their families for financial survival and ultimately the financial rewards to the extent that only the 1% has been privy to. So right now, it's all about economic preparation, economic preparedness, and survival. But on the other side of survival is where we can rise. So if you haven't already, definitely subscribe to the channel. Don't miss out on future updates that I want to continue to share with you guys. But in the meantime, we have to survive this mess. But on the other side, things could be very, very, very good for a lot of the low income middle class to actually get on top, to actually get ahead, to stop living paycheck to paycheck. But we have to get to the other side. So in the meantime, I'm stockpiling cash and I'm preparing economically. And I will continue to share news and updates with you going forward. So make sure to subscribe to the channel, share this video with someone you care about, who you want to make sure is prepared as well. And I'll see you guys on the next one. Y'all take care.